Mine.
Like, bro, good evening.
Good evening.
How you doing? I beg you, I want me to go to that this thing, that gold chart where you really explain something. Please can you go back to that chart? I want you to help me clarify something there.
Okay.
Yeah.
This one.
Go back.
This one.
Yeah, this one. Yes, this one. Yeah, this one.
So what's up?
But the other block where they there, I'm thinking the thing don't they mitigated already now, but
No, it's not mitigated
look at
because the body was not
because
mitigated. Remember the
you see,
rule I said if the week is longer than the body, taking your entry
mm,
from the body of the other block. Don't pay attention to when I said that. So since the week is actually longer than this body or equal than the body, the week is long. So
mm,
for this candle to be mitigated, it has to mitigate the body of
okay,
this
all
other
this
block.
one does not matter. Okay,
Yeah.
okay.
And also mitigation only happens when there's also a structure in like a market structure. You cannot have mitigation before market structure shifts or break of structure. All this mitigation that you're seeing, all these moves here, they are not
Yes.
valid to mitigate the candle because this did not happen after the shift in market structure. It would have only been valid if market does this shift and then comes to mitigate this here. But this ones now happened before the shift in market structure. So it's not a mitigation. Mitigation only happens after the shift in market structure or after break of structure, not before it.
And that's what they confuse me. Be saying, and that like say this thing now like this is a downtrend,
Yeah. No, this was an
but
uptrend actually. This was an uptrend.
you are to sell at this point now. You sold at this point here.
Yeah, so at this
Uh,
point.
now, but the market come be like say make another market structure shift, can they go up, something like that. And to know the real market structure shift, something like that is
You,
kind
you
of
always pay
complex.
attention to your left side, not what's happening on your right side. You're paying attention to what market is reacting off of. You cannot trade a structure shift here when there's also a structure shift here, and this one has not been reacted to. So you only pay attention to what's happening here from now, this side. So whatever
Like
you're trading from here
at
should
this
be
point, at this point now, that is like maybe 3 p.m. If you look there, can you see it?
where.
Under the inducements. Yes, at this point, they wrote three. And see the market is going to create higher, something like that now.
This,
Higher, low.
this higher high build up out. There's the third class, what we call types of liquidity. There's the trend line liquidity, there's the equal high liquidity, equal lows liquidity.
I
Higher highs,
understand.
these higher highs and higher lows that are seeing here now is actually creating liquidity under here for markets to sweep as take profit zones. So this thing now that's
Mm,
happening here now is pushing market to trigger this point of interest, and then it's now
okay.
creating a bunch of liquidity down here for markets to now. So that's why you see where my TP is
Because most of the time, I have
trend
to take
line.
any trade, and this thing is confusing me at times because I'm not seeing like I'm not
No,
like
just
like seeing that market
pay
and
attention
all
to
that.
your left side. Always pay attention to the left side first. Pay attention to
And
what happened there. Tell you what to trade here. Don't look at here. Now look at this left side. Then this should be for reaction. This should be for analysis. So look at the left side. What's happening here?
mm,
Then this should be for like your take profits and everything. But for here is what you're going to analyze and trading. You understand?
okay, okay, bro. All right, now thanks a lot, my G.
Um.
I'm done. I'm done
And,
with my question. Thanks, bro.
Andrea, so question. I've sent you a request on meet yourself.
Good evening, bro.
Yeah, good evening.
My question is based on that second example you gave us. Please, I have a question there on the second example. Not this one you just explained to this guy.
This one.
Yes, thank you. This one.
Okay.
Yes, thank you very much. Please, I want to know, or how is that a valid break of structure, please?
because this is a resistance zone in the market. This is a resistance actually. You can see this is a resistance level in the market. Can you see? Can you consider
Okay,
this?
that's
That's this week right here is a resistance level in the market. So this is a significant key level in price. So market broke this significant key level while still remaining in an uptrend. So this is a break of structure. This is a break of structure up here. This week was a break of structure. This candle here is a break of structure. This one is a break of structure. If it breaks here, it's a break of structure. Break this high, it's also a break of structure. You understand? A key level in price. This is a key level in the market. This is a resistance level in the market.
okay. Thank you very much. And how about the inducements? That inducement you say there. I want to know how is that a valid inducement, please? Because for
Because
me, I will use the other one, the one below.
this one, you can use this, but a proper inducement is the first pullback because after market did this break construction, this candle actually for this week actually means that price came down here, then now pushed up. Just because you're looking at it on the 15 minutes time frame, and market was very volatile. For there to be a week towards like this downside, it means that price actually came down here and pushed up. That market coming down from this zone is actually a pullback. If you go down to lower time frames, you see that this thing is actually multiple candles. Like I said, depending on the time frame, it is I have multiple candles. It's a higher time frame, you can see one single candle. It's 5 minutes time frame, 3 minutes time frame, you can see multiple candles. As far as this market, which because this was okay, just pay attention to see what I'm saying. It was a break of structure. This week just means that market came down here and then immediately pushed up again on that same time frame. You understand? But it's a pullback.
Okay, thank you very much. That's my question. Thank you. God bless you.
Mike, Mike, I'm not sure. Okay. What's your question?
Mhm.
What's your question? I cannot hear you. Mike, I can't hear you. Victor, Victor, what's your question? Unmute yourself. Victor, send your request to unmute yourself. Yeah, what's your question?
Yeah, can you hear me, bro?
I can hear you. Also, what's your question?
Can you hear me?
I can hear
Please.
you.
Okay, so it's about this same example that you gave.
Okay.
So it's about the inducement. Yes, the inducement is the first pullback after the big structure or MSS. But you also said it for it to be valid, it needs to be close to 50% of the break, right? So how is this really valid? Because I'm trying to understand how this is up to 50% of any of the pullbacks.
What I mean is once market breaks out or there's a market structure shift, the pullback has to push market up or down above 50% of the last move. That is what I said. So pay attention. This was the break of
Okay.
structure. Yeah. This
Yeah.
here is the last move. This is where the week stopped. So this is the last move, right?
Okay.
This pullback pushed this thing above here now and still continuing pushing market up. Market actually broke past this last move. It's more than 50%. Pay attention to what I diagram said either 50% or equal to 50% or above 50% or more than 100%. It just has to push market close to that zone. This was break of structure. This was the break of structure. This was the last move. Our market was
Yeah.
there like last move. That this candle that came here pushed market, it's not pushing markets up now. It even pushed it past the last move to here. More than 100% of it. So it's valid. what I mean by it not being valid is if this was the last move and this was the week and they does something like this and just continues going down from here, that is when it's not valid. But this pushed market way above this thing, this particular level, before eventually coming down to now trigger the point of interest. So it's valid.